What's the greatest obstacle or challenge facing you on your path to becoming financially free? For most of us, it's the time it takes to even focus on it. We're so busy with our lives that we don't even know where to start. Come join Joey and I and the team in Nashville, Tennessee, August 9th through the 11th, as we break down the different ways that you can become financially free and introduce you to different strategies and speakers who can help you on that first step.
You have questions? This event is designed to give you the answers, to take action fast, to turn the decades it's taken us to learn this and turn them into days. Don't hesitate. Go to wealthwithoutwallstreet.com/live. And don't forget to use the promo code podcast to get a deep discount.
All right, Stallion, let's talk about how do we find these businesses? You keep saying that buying a business is one of the most amazing things. Well, how do I find them?
Well, I'm not going to steal Justin's clout here by talking about all the places online to do it. There's a ton of them, and I've actually bought a couple of them that way. But I'm going to share with you something that I think goes unnoticed. It's the off-market deals that are around you every single day. Case in point, 2 weeks ago, we rented a tent from a rental company locally. They came, they installed it, they did a decent job, but the communication was terrible. Getting the quote on the front end, there's 3 different numbers. They thought they were bringing round tables, not flat, like not the rectangle tip. Anyways, long story, I ended up having a conversation with the owner. And here's what you have to look for. A tired owner who is actually answering the phone themselves, because that means that they're short-staffed and they're not running it efficiently. And it has lots of opportunity for growth, but it's just not being managed well. I walked into that business this morning because after that whole thing went bad, I actually talked to him and I said, man, I'll tell you what, it sounds like you're really having a hard time, and I don't want to hold you to it, but man, if you ever consider selling the business, I'd love to talk to you about it. And he's like, well, you ought to come by and see me. And so I went by there today, and immediately I saw all these opportunities just in the lobby of his building. But I'm just telling you, that is where you find the deals, is a person who's tired, who has an existing business, who has tons and tons of opportunities, and you just got to solve his problem.
So all you do is ride around looking for tired business owners.
I mean, I spend time with you every day, Russ. It's a good training.
Or you just look for service providers to you and your family who do a poor job. That's what I heard, basically.
Hey,
is that one of those 2 options? That's how I'm going to get I said I'm going to find the deal.
You're good. Yep, 100%.
Okay, I'm hoping, Justin, you have maybe a more, practical, approach to this. Because I'm not certain, we've got all the time in the world to ride around looking for these tired business owners. How about for you, man? How are you finding businesses?
Yeah, great question. So yes, riding around looking for guys with dark circles under their eyes is a way to do it. Probably not the best way, but I do think, okay, so being in the brokerage space, like there really are lots of places to go. I'm with Website Closers. So if you're looking in the online or digital space, tons of websites that you can go to, whether it's Website Closers, Quiet Light. There's lots of different ones that do kind of the internet-based stuff. And what I mean by that is like e-commerce, digital marketing, content sites, lots of different opportunities that are in the digital world. But then there's also some more traditional stuff too. So if you go like some of the larger ones like BizBuySell, BizQuest, some of these are going to be bigger ones that you can go to that are online. And it's kind of fun because you can go on there, you can search industry, you can search locations, you can search lots of things. Cash flow, that's the big thing. So you can search cash flow and you can find different ones that could fit you. I think that's a big deal. It's like the first thing is just how do I kind of cast a wide net so that I can get exposed to a lot of different things to start figuring out what would be a good business to buy for you.
I love that. Coming over to you, Tim. How about for you, man? How are you finding businesses if it's not online or looking for bad service providers?
Well, I like to invest in what I know, and I like to stay in my lane. And so whether it be kind of the first business that you're just kind of getting your feet wet, or potentially you already have a business and you already have some customers, and you are thinking about building further in your existing business, look for what else you want to offer your client, and you can actually buy a business and bolt it on to your existing one. So I think for both sides is look at things locally, if you're investing locally, that you know about, and potentially companies that are smaller and are independent that you already do business with. Talk to your customers. If you have an existing business, where else are they doing business? And more often than not, right now especially, I will then go out to folks and say, hey, very similar to Joey, minus the driving around without the, looking for dark circles. Most businesses, small businesses under about $1 million a year in revenue, many of them don't have a succession plan. And so I would approach them and say, hey, if you're ever thinking about, what's the plan if you're going to retire? And if they say, well, we won't really have one, that's a great way to start the conversation, because their only other option might be to just shut down. And you can pick up a business like that for significantly less than building it on your own and deliver some value for the existing business owner.
I think you're right there. And it reminded me, just thinking through as you were talking, like there's so many opportunities we have. We live in a world of private equity now where people with large amounts of capital are starting to deploy it into private businesses, and they're buying businesses in bulk. And how does that apply to you as a business owner? Right. Well, just to your point, like I have this business, I'm trying to look at other businesses I can bolt onto mine to help grow mine. Well, one of the things that I'm seeing out there is that how can we buy businesses similar to us, right? How do we take our same model, go buy other ones and grow them up to a size that we can then provide to a private equity? I don't think we've even considered that as an idea. People ask me, Russ, well, how do you find businesses? Thank you for asking. They find me. They find me. Now, you may not have a podcast that you get to talk on that, gives you that kind of influence to the world, but you can literally start talking to people. We've said this from the beginning. If you're starting out as an investor and you want to figure out how to find deals, you just start telling people and introducing yourself, not as an accountant, not as an emergency room doctor, but you introduce yourself as a professional investor. And people are like, oh, really? That's interesting. And you just start talking about the kind of deals that you're looking into. You know what will happen is people will start to go, hey, by the way, did you know? And they'll start sharing deals with you. Well, the same thing could be true with businesses, right? If you're always a professional investor, you're always looking for deals, and you're telling the world that this is what you're interested in, people will start trying to solve that problem for you. They will literally, remember when you were single, Joey, and people were like, hey, who can we hook this guy up with? Who can we connect him to? Because we do not need this dude single for long. They introduced you to your wife. I guarantee you. Like, that just had to happen, right?
Well, actually what happened was they had to sell my wife on me. I was actually putting out all the vibes. And they were like, look, this dude needs a lifeline. I mean, let me just step in here and help him out.
Yeah.
So you're exactly right.
You're 100% like.
Can I give you can I give you a real life story real quick? So
please.
Exactly this. So today I was on a conversation with a business owner. As you guys know, or some of you may know here, Russ and Joey and I, we have a partnership in a candle company, online candle company, right? So we do that. So I have ownership in a couple of those types of brands. Well, there's a supplier that's local that sells glass, wax, all the things that we use. And we've been buying from them for the last few years. Well, guess what? They're in a position to where they're considering selling. And who do they call? I was on the phone today because they know that's what we do, and they know we would be interested, and they know it would be a really easy vertical integration, and that we're local. And it was awesome. So, I mean, just to your point, Russ, it was like literally today letting people know that you're interested, especially in the world that you're doing business in already. You're going to get the calls, and they're going to, and obviously if you're likable like Russ and Joey, then, they're going to offer it to you first,
Well, yeah. And I, Warren Buffett, who is fantastic at buying businesses, by the way, for all of those things, Warren Buffett is a fantastic stock investor. Wrong. He's an amazing business buyer, right? Like, he understands his gift to the world, and he finds businesses that fit within his gifting that he can apply his unique capability and his company's unique capability that grows them. And people start coming to them. They start looking to be around excellence, and you have that capability, you have that potential. All you have to do is let the world know that that's what you're looking for. And just like Joey's wife, she'll end up getting sold by her friends to somebody. So, all right, let's move on to our second point. So we talked about where are we going to find them?
Well, hold on. Before we do that, what kind of people should be buying businesses, Russ? Like, and I think there's some people that are hearing you right now say, oh, this sounds interesting, but I'm not an entrepreneur. I've always had a W-2 job. I've never ventured out into having a conversation like what you just mentioned. Is that for me, or is that always for someone else? Is that somebody that's just wired differently? Like, how would you answer that?
Well, I would say business ownership is not something to be treading into lightly, right? Like I think there's a reason why 7% of the world are entrepreneurs and 93% I work for them. So it's maybe unlikely that you are someone who's going to buy a business. Maybe you're not that gifting. But here's one of the things I have learned through going through our investor DNA is that when you know who you are, it really becomes clearly what the things you should be investing in and doing. But also your investor DNA will also tell you where you have shortfalls, and maybe you can find partners who have that gifting. Maybe you can bring an element of a technician to the business, going back to the E-Myth, right? Michael Gerber talks about those three components. You have the technician, you have the manager, you have the entrepreneur. Well, maybe you can be in that partnership, right? There's lots of different books, Rocket Fuel, that talks about the integrator versus the visionary. So you can figure out maybe you're not that visionary. Maybe you're not that CEO, but maybe you could be a great COO and still business owner, right? And we've seen that success. So your investor DNA, to your point, Joey, could definitely be a tool that could be used to help you better understand that.
And if you don't know what we're talking about with the investor DNA, you have an opportunity. Go to wealth.wallstreet.com/free call, and you can actually learn about our Ignite coaching program through Apex that will actually walk you through all of these things that we're talking about so that you can have a coach along the way and be able to identify these opportunities that maybe you've just thought about, but now start to take action on. So check that out when you get a chance.
Oh, totally. All right. So where do we find them? Let's move into point number 2. What should we be looking for before buying? This is probably a critical component. Tim, I'll let you go first.
Yeah. So the things to look for is, as Joey just mentioned, understanding what category of type of business is right for you is one of the most important things. I think right after that is I want to break the fallacy that a lot of folks have that they think that they're going to buy a business. It will be not only the only business they own, but it will also be the last business they own. And so what I would say is, especially depending on whether this is your first time or you've done this before, you've bought businesses before, look at something that allows you to move forward down the path of entrepreneurship that is right for you. So size it appropriately. Make sure you're not putting all your eggs in one basket or all your chips on the table, if you will. Because for most of us, I know for myself, the first business I started ended up being more of a learning lesson, and that it taught me what I needed to do better the next time. And usually, lightning doesn't usually strike the first time. And so finding something that is appropriate for you, finding a partner if that's what fits your investor DNA. And I personally like the creative process of working with others. And so the business has 5 core needs. It needs to attract new talent. It needs to nurture that interest. It needs to convert customers or prospects into customers. It needs to deliver a product. And then it needs to hopefully hold on to those folks for a long period of time. And those needs have to be met, whether you are the one to do it or a partnership or someone that you hire. So for me, once I find them, I want to find the one thing that I can bring to the business to deliver the most amount of value in the shortest period of time.
That's good stuff. Justin, obviously you're helping people buy businesses and you're helping them go through this kind of due diligence process to know what they should be looking for before buying a business. What is on that list for you?
Well, I think, the first big question for me is like, what do you want? What do you want your lifestyle to look like after you buy the business? And because you could say, hey, I want to buy an e-commerce business, and I could say, great. And then my question will be, how involved do you want to be? Because we've got one that we just help a local buyer find that is very hands-on. They actually are producing everything in-house that they ship out. That is radically different than if I buy 100% Amazon FBA business, where everything goes straight from the factory to Amazon, and I never touch it, and someone else runs ads for me. And so I may spend 2 hours a week on it versus 20, 30, 40, depending on how engaged I want to be with production and manufacturing, that type of thing. So I think first thing I say, hey, what do you really want? What do you want your lifestyle to look like post-acquisition? Because that's super important. And I really do think, going back to what you guys talked about, I think the investor DNA stuff is absolutely critical, because if I understand that about a buyer, if I understand a little bit more about their profile from a wiring perspective, I can really help them figure out what the best business may be for them, and how active they may or may not need to be, and how much they need to invest and risk they need to put into it. Because I got a great friend who he's invested in a couple of different things with me. And as a minority partner, he's fantastic. He loves life. Recently, he took on for the first time to be the majority, to be the main guy, to be the majority partner, to one where he's everything, his name's on every loan. And honestly, his stress level went like to a 10. And within 30, 45 days after the transaction, he's like, hey, man, I don't think this is for me. I think I want to get out. So now what changed? It wasn't that he didn't want to buy a business or invest in businesses with other people. It was just he probably got himself in the wrong seat in that transaction. So I think a big part of that, again, going back to investor DNA, that really helps me to understand what do we need to look for in a business for somebody.
Well, so Tim, Justin, talk a little bit on due diligence in this, because I think sometimes from a numbers perspective, people need to better understand, what should I be looking for there? How do I know a deal's a really good deal? Justin, Tim, jump in. What would be some of those metrics that you were looking at on every single one of them, or a framework or something that we can apply maybe and lay over as we start to identify businesses that we want to buy, but not knowing if they're actually a good business to buy?
Yeah, I think that's a great question. I deal a ton in e-commerce. And so whenever I'm looking at cash flow for something like that, I'm thinking about a couple of different things. I'm thinking, number one, if you buy a business, there's obviously going to be debt service that's associated with that. So, typically we deal in a lot of that $1 to $5 million range for business purchases. A lot of people use an SBA loan. And typically what I'm going to tell people is, hey, if you use an SBA loan, about 50% of that net cash flow that you see is going to go towards the debt service on that business. So immediately I'm going to say, look at the cash flow. If you're going to use this type of loan, cut it in half. Now think about your lifestyle, right? And then think about your lifestyle and think, if would 50% of the cash flow really do what you need it to do to push the business forward and allow for what you want? So that's probably one big thing that I'm going to think about. But then there's lots of other stuff to think about too in terms of time.
Tim, what would you add to that?
Yeah, so I try to make things easier on myself. And I come out of the investment world, and there's an idea, a saying that says, you don't want to be the person catching the falling knife. And what that means in my world, as looking at businesses, is I want to have a tailwind. I want to be in an industry. So the easiest example would be, newspapers over the last, 10 or 15 years. Might be a great business if you look back in the past. But going forward, where's that industry going? Is it growing or is it shrinking? Because it's really hard to have a successful business in a shrinking industry. So let's just say you check that box. Then you want to ask for at least 2 or 3 years of financial statements. And you want to look at the same thing. What is the trend? I like looking at trends. And there's a saying, the trend is your friend. So is revenue increasing? Is profitability increasing? So where is the business going? Because, unfortunately, the reality is you are at an information disadvantage, and the seller might know something that you don't. So to Justin's point, you have to have that margin of error to say, you know what, I might find out something, when I dig into this. I want to make sure that I've got as much wiggle room as I possibly can to make sure that this remains a really, really good decision. And the number you will probably look at is what's called seller discretionary earnings, or SDE. Because I owned a fitness business for a very long time. And when we were smaller, I was doing everything. So if I went to go to sell that business and a new operator wanted to come in, they would have to backfill me, which means they need to hire probably 1 or 2 more people. So I can show profits, but I basically just took a lot of that excess profit and made it my salary, right? So you really have to think about, what does the organizational structure look like? Joey mentioned E-Myth before. really look at how you're going to actually do this. And to Justin's point, what do you want your lifestyle to be? What does headcount look like? So you have to think through these things and make sure that the business can support the vision that you have for it.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to what'swhatwallstreet.com/PIOS. There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared though for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
One of the things that I look at before buying a business is really, how much do you love the model, right? Business is hard, right? Like, so let's find stuff that we really get passionate about and interested in, because this is going to take you through those points where you really kind of want to quit. Somebody you know very well, Tim, Alex Hormozi, has a quote that I love. It says, once you become an entrepreneur, you have only two outcomes. One, you eventually succeed, or two, you give up before you do, right? And I think too oftentimes people fail, not businesses, because they have picked a model that they're not really in love with. They just thought it was an opportunity to make money, and they couldn't get themselves through the hard part. There's going to be ebbs and flows in all businesses, and it's whether or not you're able to stick those out. And as well as, if you love it, you'll probably be able to add unique value to the business that will help enhance it as well. Joey, give me one last point as we talk about what should we be looking for before buying.
Well, I'll just say, I'll share a learning, if you will, and especially if you're of a high I personality or high S personality, sometimes we get very optimistic and we kind of assume things are better than they are, right? It's just the case in point of how we are. When it comes to buying businesses, you're going to have to look at a lot of them, right? There's not this one and done kind of thing. The idea that someone has come to you and said, hey, I'm looking at selling my business, 99% of the time, it's overpriced. It's got a major problem that they're not willing to tell you about, or there's a reason that they're getting rid of it. And if you're the person, the next sucker in line, that's a bad place to be. So I would say you need deal flow, as we talk about in our mastermind. If you see one deal, it's a really good looking deal. If you see 100 deals, that one deal is a dog. I'm just telling you, compared to others, that's just how it works. And so if you're going into this and thinking, I'm going to buy a business, make sure that you go into it with that kind of perspective. Is I need to see a bunch before I pull the trigger. And especially as I've gone through like these online website stuff, we looked at a lot before we bought the one for my daughter. And this one has ended up being really good, but man, there's a lot of them that have just been garbage.
Well, I do think that, it's just like hiring team members, right? Too often times we get the first 5 people who apply for the job and we do our interview process and we pick from the 5. And there's a chance that person may be excellent. But I was always given the advice that you shouldn't even start interviewing people until you have at least minimum 50 applicants. Because the end to the same point is that then you start to see who really stands out above the crowd. You really have a decent pool of people to pull from. You should probably be looking at a lot of businesses. And while I said you should love the model, you should be passionate about it, I will leave you with this little disclaimer there that says, don't fall in love with the model. Make sure you're buying a successful business. Don't buy 100 unicorns because you're like, I got 5 daughters. This is going to be such a cool idea. And you stick around with this thing for 9 years, continuing to put it on your business partner's passive income report, showing negative returns because you're so in love with the model, even though the model is broken. Okay.
Hypothetically speaking, I would agree with you. But you know what? There's deals like that all the time that come back from the dead and just make your business partner just pissed.
Yeah, they're called Friday the 13th. All right, let's move on from that. All right. So point number 1, how do we find them? 2, what should we look for before buying? Number 3, setting yourself up for success. Justin, how can we set ourselves up for success?
Great question. So I think the first thing is, as Tim talked about, you got to understand your numbers. And I understand if the cash flow is right, then guess what can happen? Now I can make sure that I'm putting myself in the right position within the business. So, as you understand, as you look at a lot of them and you kind of narrow it down, you're thinking and visualizing, okay, what's my role going to be in this thing? And is the model and all the things that surround it, are they the right fit for me? And if the answer is yes, then whenever I think about setting somebody up for success, the first thing I think about is what type of training do I need from the seller? Okay. And I know that may sound like a really, really simple thing, but I really encourage anyone buying a business, let's lay out a very, very clear 90-day transition plan. And we are getting in detail as to what they need from the seller to make sure they're successful. And we're gonna lay out a schedule. We're gonna lay out a checklist. We're gonna make sure that the assets don't just transition, but that the knowledge transitions. Because a lot of these mom and pop ones, whether it's e-commerce, whether it's service-based, they don't have everything documented. So much of it's in their head. And if you can create a really good training schedule with that owner when you're transitioning out, now you can begin to systematize everything, which is a massive thing that you need to do if you're going to grow the business post-acquisition. But the only way you can do that is if you can pull everything that you can out of their head. So for me, when I think about setting up for success, I think, do you have a clear plan to get the knowledge out of that owner's head that you need to be successful?
Totally. How about for you, Tim? I know we're getting into setting people up for success, looking at operations, looking at finance. What would you add to this? How can we be successful?
I think success starts before the deal's even closed. So I would ask myself, through the diligence process is more of an exploratory process for yourself, right? So by the time you go to actually striking the deal, you should know the 3 things that you would immediately do day one to really make sure that you are delivering value and you're able to reduce the risk of the transaction from the second that you take over. And so for me, I would look at, can I talk to some customers? Spend some time. If it's a brick and mortar location, spend time, talk to people. What do you like? Et cetera, et cetera. And then really come prepared for that. And I personally also believe that having a mentor or having a community of people to talk to in that diligence process is probably the most important part, because they can see around the corners, and we pay the learning curve. We either pay it in time, or we pay it in money, or we pay it in risk. You have to choose how you want to pay the price. And so I would highly recommend anyone find a room, find a community, a mentorship group, a business accelerator like we do here at Apex, is to make sure that we bring all of this collective knowledge together, because I have blind spots that I know that I am not even aware of that Joey can see. And I have blind spots that Russ can point out. And Justin can say, hey, what'd you consider about this? I've done these deals before. Look under this rock. And I think that alone is worth its weight in gold. And you will get, every experience I've had when I've brought other people's perspectives forward has always paid me back 10 times. And so I think getting outside of ourselves, bringing up the kind of community mindset and that diligence process as a group, is, especially if you've never done it before, is well worth it. So make sure that you can find someone that you can surround yourself with, or a group like we have here at Apex.
I love it. Like a deal machine, like something you can bring your deal, your exactly. business in front of people and let them kind of evaluate it. Let them be your board of advisors to helping you improve it. Like, think through what could go wrong. Where's the opportunities? I love it when people ask me the question of how do you set yourself up for success? Just like what you said there, it's what is the exit strategy? Like, when you're buying a business, you should immediately be asking you, what is going to be the exit strategy? Can you buy it today and sell it tomorrow for a profit? Like, those are the deals. Like, if you knew you could buy the business today and sell it tomorrow for a profit, there is an opportunity. What is that complex problem that's happening in the business that you could solve with your unique skill set that could add value, give you that competitive advantage. I think sometimes we get around smart people, we start hearing those ideas. That's what I love about being in those rooms. I hear ideas and I start applying them to other ones. Joey and I are on a call. We were interviewing Brian Spear with Sunrise Capital. You're going to hear this podcast soon. He's talking about parking lots. He's talking about their unique gifting of how they were buying parking lots from people who were not making money in them and immediately knew before they bought them how much money they're going to make on them. It was already baked into the deal. It was like brilliant. And immediately he's going through it. I'm literally on the podcast, Tim, and he's talking and I'm texting a guy who sent me a deal that night. I said, deal's fine me. And I'm starting to ask him the same questions that I'm learning from this strategy. You got to be around people who are thinking that way. Joey, we've talked about Marcus Lemonis on this podcast, the prophet. Like, how do we add those little things around our business so that we prepare it for exit? We get things, these auxiliary companies that can add value, but we can also then be maybe one of the biggest, generators or customers for it. So it becomes profitable immediately because of what we have. How about for you, Stallion? What would set us up for success?
Well, I think, we've talked about cash flow, and one of the most critical parts of cash flow is how do you acquire it from a financing perspective? And, Justin mentioned one way being the SBA loan, but I think I want to challenge you as you are looking at potential businesses to think like a bank, right? There are many, many opportunities to go in and get creative to solve a problem for whoever that business owner is. And this is actually something this week that someone said, you know what, I definitely want to make sure that we finance this business over a period of time. You're going to want that better than anybody because you're not going to want to have to pay the capital gains tax immediately, and you're going to want that cash flow over the long haul. So the way you position it to a seller is it's their best interest to finance this business to you. And there's a lot of wisdom in that, especially if that person is trying to solve the problem of where does my cash flow come from after I've sold this asset? Because if you think about it, for instance, the gentleman I talked to this morning, he literally said, hey, I bought out a partner several years ago, and I had to make sure I owned the property because that's my retirement plan. He literally was thinking, I'm going to own the real estate because that's going to be my retirement. Well, if I know that that was important to him, how much more creative could I be in the way that I actually buy it from him and create an additional stream he didn't even think about? How much more potentially is he interested in selling today if he knew that was an option? So anyways, long story short, but think about the way the cash flow works on the debt service to your benefit, because you might be able to do interest-only payments and stuff like that allows you to have the biggest margin of safety in making sure that business is profitable and you can hire the right people and so on. So we can keep going on that, but how you finance the business is critical. Make sure you have several eyes on that. Like, don't just try to come up with it on your own. Make sure you have several people speaking into that.
You don't have to. That's the beauty. Like, man, you shouldn't have to. Buying businesses, it really is easy. It just may not be easy for you because you may not be equipped with all the knowledge at this point. So you surround yourself with people who make it easy. It's like doing taxes. For an accountant, taxes are easy. They do it in their sleep. We're like, goodness, I hate it. This is overwhelming. Well, you got to find those who's in your life who can help you. When you have a problem that's hard, right, you break it into pieces and you find the who's that can help you with the deal. All right, final thoughts, gentlemen. Coming to you first, Tim.
So something like 95% of businesses fail in the first 5 years. And as business buyers, we are in the position to evaluate what is the risk of that business. So if you find a business that is in your investor DNA, it is the type of business that's right for you, and you know what it is that you're trying to achieve, by looking at a business that's been around for 5 years or more, you've already put yourself significantly ahead of starting from scratch. And so I would think, know who you are, know what you love doing. What are you going to skip to work, if you will, Make sure you've got the type of business that can benefit from your point of view and your unique skill set. And then surround yourself with other people who can help guide you and see the things that might be blind spots for yourself. So a combination of your creativity and a community can lead you to the outcome that you're looking for, and hopefully build a business that you may never want to have to sell, and you always have the option to do so.
Love that. Thank you for being on. Justin, final thought.
For me, I just want to kind of cast some vision and do that just through a really clear example. I know Russ and Joey talk all the time about how hard it is to save enough money under a rock and, some type of investments to build wealth over time. And I think about, even if you're a little further along in life and your career, you could be 45, 55 years old and go buy and maybe not have very little saved, or maybe just enough for maybe a down payment on the business, but go leverage people that do have cash, or go leverage an SBA loan. And I think about that in particular, like over the next 10 years, if you bought a cash flowing business, just think about this. Let's say you've got enough, you say you've got a couple of $100,000 right now, enough for a down payment on an SBA loan. So you put 10% down. Now I go buy a $2 million business. Let's say that $2 million business is cash flowing $500,000 a year. Let's say 50% of that for the next 10 years goes to debt service. So I'm cash flowing $250 of that's going to debt service. And 10 years from now, if I just grew modestly, let's say 10 years from now, I invested $0 more outside of just growing the business. Not only did I cash flow $2.5 million over that 10-year period, I built an asset that was probably worth $3 or $4 million. So when I think about the numbers for that, it just blows me away. And it also gives me hope, as I'm 45 now, right? Getting a little bit older, that if I haven't maybe done all the things that I was supposed to do to save enough money to make sure I've got several $1 million whenever I, retire, this gives me hope when I think about buying a business. So, I hope that people hear that and go, man, I can still do this. I can still have the lifestyle and give the things to my kids that I want, hopefully, whenever I'm getting close to retirement age.
Love that. Thank you for being on. Joey, final thought.
My final thought is, I guess, related to what Justin is saying is, at the end of the day, if this is unknown territory, but it seems interesting to you, my only challenge to you is to keep walking until the door is shut. And it may be that the first door is shut, but you keep going, because the path to financial freedom is not simple. The formula is simple, but the work to get there is hard. And that's why we exist, to inspire, to educate, and then to surround you with the proper support. And so if you haven't already, take us up on our offer to talk to one of our associates here about the Apex coaching program, the Ignite Financial Freedom Coaching Program. And that way you can do this with somebody else. You don't have to do it alone. wealthwithoutwallstreet.com/free call and take the first step.
Well, gentlemen, thank you for providing so much value. We said that our goal was to become rich. Don't build a business, right? Don't start a business. That's hard. Starting something from scratch is hard. Buy cash flowing assets. Well, this is a cash flowing asset. Businesses can be cash flowing assets. If you do them right, you don't even have to be the operator of the business. You can step in as a B quadrant business owner, have great operators in place, and allow them to keep running them. Start acquiring them. Joey's got more LLCs and he's got kids. It's crazy this guy keeps acquiring businesses. And most of them are successful, minus the unicorn thing. You too have this opportunity. Hopefully you found value in today's topic. If you did, take time, rate, and review the show. See you on the next episode. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.